Good morning. What's going on, guys? Welcome back. Been a while since I've seen y'all, and let's get this started. I hope that you guys have been having a good time in this past 1 month or so. Now I've been a little bit inactive, a little bit, well, I've been active on Discord, but not really active on YouTube. But welcome back to everyone who has missed this stream. You wanted a straightforward update. It's been a little bit of time because I've been busy with wedding preparations. For most of you that don't know, I'm going to be married in exactly 1 month from now, which is crazy. Exactly 1 month now, 4 weeks away. Yeah, so just been kind of busy with preparations, traveling, a little bit of this, a little bit of that, but not to bore you guys with the details. I wanted to come on here and give you guys a quick, straightforward update in market conditions. Kind of give you a briefing on what I'm looking at, where we've been most of this year, and where we are headed to. What you should be keeping an eye on, as usual, for a lot of y'all. So let's get started. As usual, we will start with the indices, SPX, NASDAQ, and then the Russell 2000. I do particularly also like the Dow Jones in this kind of a scenario, but we'll go through that in a second as well. We'll talk about the 10-year yields, the dollar, the VIX. We'll talk about various sectors, and then I have a bunch of opportunities that I want to go through with you guys. Of course, as usual, make sure you smash that like button if you can, and drop a ticker if you are, struggling with analysis. You want me to analyze it, but only drop the ticker with your bias. Okay, I don't want to just a ticker drop and then you don't tell me what your bias is, because I want to understand what you are seeing that you want me to give you advice on. Okay. And that will kind of help me a little bit more, because otherwise I'm just giving you, a non-biased opinion, and that's not going to help you. So I want to check your bias, check my bias, and let's get this rolling. So just going back to where we were at the beginning of this year, we had a pretty interesting start to the year. Prior to that, somewhere towards the end of last year is where we reiterated our final buying opportunity for the SPX. As we were coming back down from the 10-year yield spike. Now, why was this 10-year yield spike in play? It was mainly in play because at this moment, the Fed took the rate cuts off the table, right? You guys remember that in the beginning of the year, we almost had a projection of 8 to 9 rate cuts. And the Fed had taken that off the table. That's the reason why we had a little bit of a correction in the market. And ever since then, ever since our final buy iteration, which before that was in March of 2023, was our first buy signal with the group, we've seen the most massive uptrend and the strongest, biggest secular bull trend of a little while, right? I think in the past few years, this has been one of the most largest gains, and supercharged by a wave in AI, considerations in further mega cap growth that have seen consistent earnings improvements, and also the rise of multiple sectors that have been kind of transitioning, rotating ahead of the Fed interest rate cuts. We've been seeing a lot of the market just chugging along, correcting very small waves, and then moving higher quickly. Now, based on our previous assessments, I took the liberty to plot the path of the next extension wave, which is from the previous buying iteration point all the way to the previous high point. So this point here all the way to this point, to draw a Fibonacci extension, because we can now use this wave to project where our first level, second level, and third level targets would be for the upside, right? More importantly, we'll also get our downside support targets, which are going to be all of these levels. And so now you can see that 6,000 on SPX is the 61.8 extension, right? Currently, We are at the 23.6 extension. Now, prior to this, at 5,300 was the previous extension, which we have already crossed. So the Fibonacci was no longer valid. We drew a new one, and these are our new targets. Now, it doesn't mean that we have to get there right away. Remember that, okay? It doesn't mean that we're going to go zippity zip zip and like this within next month. Okay, relax. Doesn't mean that. All I'm saying is these are your long-term targets now that you can now use as potential levels of resistance. Okay, potential levels. That means only upon confirmation is where you're going to actually act on them. Okay, so right now there's nothing to really act on until and unless SPX rejects at the existing level 5565, or if we go up to 5737, then that's your next rejection, and then 5877, and then 6000 eventually at the 61.8 extension, which is going to be a golden ratio for rejection in the long run. Now, if you look at the Nasdaq's a bit more advanced than the SPX, right? Nasdaq here has just breached the 38.2 and is chugging up into the 61.8, which will be 21,237. That would be your next key level for rejection. We bounced very firmly on the 23.6 as a support, and we are currently breaking out of the 38.2, therefore leaving us with the 61.8 and the 50 as potential upside targets now for the next run. Okay, so now this is more likely to be a stronger case for target hitting than SPX, because remember that most of what is driving this secular bull trend is tech. And so Nasdaq is going to naturally perform better than SPX in these conditions until and unless we see a handful of things change. Now, what are the handful of things that have to change here for SPX to start outperforming? Well, let's go through it together. So for most of you that have not been following the econ macro background, let me just give you a quick update that, you know, back in the early part of this year, we were talking about a very important signal for the market to actually see the Fed cut interest rates. Now, does anyone remember what that signal was? I remember telling you guys, there's one specific thing the market looks at. It's not just inflation, which is PCE, right? But there are two things mostly, right? The Fed's mandate is to keep inflation low. The Fed's mandate is to also keep prices stable, right? But there is also a third one, which is very important. And we're seeing that third one start to improve now, which is jobs, okay? And I spoke about this like many months ago. Like I want to say the beginning of this year, and I said, the Fed will not cut interest rates until the job market cools down, right? And at that point of time, the job market was super strong. We have been having a super strong job market all the way through this rally here, all the way strong, right? And now that the job market is starting to see a little bit of cracks, the market has not fully priced in the fact that the Fed is going to actually pivot yet, okay? However, I will say, you know, just going on our Discord, we will pull up very simple info, just by typing econ Fed rates, and you'll see the upcoming Fed rate chances, and you'll see here that things are starting to slightly skew now. So, of course, for the July meeting, there is no chance of a rate cut, okay? That means rates are going to stay between 5.25 to 5.5. But for the September meeting now, the market's pricing in a potential rate cut. You can see that, right? And then for the November meeting, it's kind of pricing in a rate pause currently, okay? And then in December is where the market's pricing in another rate cut here. Now, do I think that this is actually going to work out this way? No, I don't think so, okay? But it's nice to see what the market's pricing in, okay? What do I price in? I have no freaking idea because I'm not a crystal ball. I cannot give you these predictions. But what I do think that will happen is that eventually the Fed will only start to cut interest rates when the job market has shown a higher rate of unemployment and inflation's actually consistently cooling down. We get to that sub 2.5% range in PCE. That's when we actually start to see the Fed nod its head and say like, okay, you know, this is where we need to start to do something. And right now we are just not there yet, okay? So I wanted to give you a straightforward update to just put everything on the table and you can be the judge of how you see things going forward, okay? Now, moving into IWM, which is the small mid caps. And I believe I've spoken to you guys about this. I told you guys this breakout here was a potential buying opportunity, and then the pullback, and then another pullback here. And now this is my another iteration to tell you guys that if the Fed does cut interest rates in the future, this will be one of the best macro trades to take in the next year, okay? If you don't own leaps on IWM yet, you should heavily consider that, right? That means 9+ months out contracts that will just give you a steady delta gain. And don't go for super far out the money contracts. Instead, take the strategy of taking closer to the money strikes, so that when the move actually happens, you will benefit from it very quickly. So that if you buy $200 calls and IWM moves to 211 or 215, which is your previous resistances, then you will be able to take a good chunk of your profits off here and go risk off very, very quickly. Okay, so that's something that I wanted to kind of put out there. Now, the bond market, let's talk about this a little bit, right? 10-year yields, one of the major focuses that you guys should be always keeping at the back of your head, right? You should have this as part of your planning, as part of your routine. If you're not, I don't know why not, right? And the reason is very simple, because the valuations of stocks are dependent on the 10-year yield, okay? And in the past, you realize the 10-year yield spiked very hard, right? In the beginning of this year. Why did that happen? Sorry, towards the end of the year, towards 2024. This was because of uncertainty within the rate cut situations. And then it reversed very quickly after that, right? So now that we've been seeing that kind of play out a little bit, we're seeing the 10-year yield start to come down again. And this is not anymore from a rate cut perspective, but this is more in line with inflation expectations. This is my perspective anyway. I don't think the bond market here is reacting poorly to any economic news, because the economic news is actually pretty good. There are no surprises as yet, and when there will be surprises, that's when the market will change its tune. But right now, it's more about, okay, you know, things are moving in the right direction, inflation's coming down, so therefore, the yields of bonds have to come down in order for us to actually get a good, you know, chance at entering these positions. So remember that when yields come down, bond prices are going up, and so these bonds are currently being bought, slightly being bought, I would say, heading into this next rate cut expectation. Okay, dollar index forming in a nice little pennant, and you guys know how this one really goes. You have very simple pivots here that are going to give you your upside breach, downside breach pivots. Whichever way this goes, that's going to kind of give you your direction eventually. But I'm not so concerned about the dollar getting extremely out of control higher here. If it does, what's going to happen is that will time up with a tactical pullback on SPX. So I would expect that sometime at around 5,700 if SPX can get up there. And that will set up for a nice tactical pullback on SPX as the dollar breaks out, and then potentially reject and come back down. And that's just the way I look at the dollar right now. It's just a yo-yo, right? The VIX, nothing much to update here. Well within the safe range here. Not much out the money bets being thrown about. S&P 500 futures pricing in just a neutral 12.459 right now. 11 is one of the lows. You can see historically speaking on the VIX, 11 and 10 are really lows. 14 to 15 are your first step higher, and then 17, 19, 21. So right now we're in that low range of panic. Fear is not really that high in the market, and people are not really betting on either sides yet, right? So that's what I have for the macro. Now let me see here. Tesla bearish for retest of breakout, then long again. Okay, Jonathan, IWM looking for a wave one retest after consolidation. Okay, and then Richard, crowd consolidation currently might break into new highs, reach up to 400. Okay, so I'll come back to those opportunities. Let's look at IWM first, since we just spoke about it. And yes, so I think you have a pretty good judgment of the situation, except for I wouldn't call this wave one though, because I think that the wave one was actually this wave one. It came back down below that to retest, and now it's just consolidating above. But I still do like this though. So retest consolidation here. With IWM, you kind of want to wait for a potential breakout above 208 to 211. This area here, right? Let me just draw it out for you guys. This area here is where you really need to pay attention to it, right? Because this is a very grave supply area. And so if it can break out above this, is where I would start looking at this and start taking some really, interesting short-term positions. But as of right now, this break out of this general range that it's been in for how many years? Almost 2 years, right? It's broken out of it, and now it's consolidating above it, which is nice. Okay, this is a good setup so far. We want to see, obviously, this is very good basing here, demand forming here. We want to see the volume and momentum come in, and that's likely to only come in after a rate cut situation is announced. Okay, the market's just throwing a fit right now, moving sideways, and you can see it's consolidating in a pennant, right? So just give this more time. I think it needs to play out more, and eventually we'll get what we need, right? Okay, I know you guys want me to cover Tesla. Now, for those of you that don't know, we killed Tesla on the Discord together. Okay, we killed it. I mean, like, honestly, this past 3 weeks have been insane on the Discord. Like, let me just show you some of this shit because I can't make it up, right? We started with NEE, playing it up all the way and then playing it down all the way. We bet on an Apple breakout that was a beautiful tape. We immediately trimmed our position. We had runners on NEE. We closed that out. Fully out of Apple that next day. Added some more NEE short position. Took more profits on that. We took a starter position in Net before it started moving. That was a massive mover. Right, look at Net and how it moved in the end. It was insane. Look at that, right? Beautiful. We took it before it broke out here. Very, very nice setup. You can see that the 1 hour here is where we started to enter that position, and you can see how much it moved after that, right? We entered literally right here, and boom, it's been like moving like crazy. And then we had, from then on, we had so these were runners on Net. These were beautiful positions, multiple 100% baggers. And then there was this Roku play, which was insane. Don't know how many of y'all caught the Roku play. This was really good as well. We had a starter position in Amazon before it started moving. The Roku play delivered some really nice substantial gains. We took profits in Amazon. And then we had a snow play that played out. Roku was crazy the next day, almost 120%. Snow also paid out really nice. And then I had my first loss in almost 2 weeks after that, which was SPX puts, which were timed kind of incorrectly. But this was more of a hedge, so it didn't really matter. And I was going to add more, so I had a very low risk on this. So it didn't really, break me that much. It was just a $5,000 loss, not that bad, right? And then we had BABA. This was the most recent one, which is still playing out right now. Okay, so we took a swing position on this for December. It's more like a longer term position after seeing some technicals. So it's been a pretty good 2-3 weeks. Now, I know I'm not super active on YouTube all the time because let me tell you guys that my MacBook that I just bought, which is new, the 15-inch MacBook Air, is actually not able to stream OBS. It's really weird, but every time I stream on it, I feel like it crashes. And that's the reason why I haven't been holding live streams, because I haven't been at my desk. And not being at my desk means I don't have access to all of this, infrastructure that I built for myself, like my 4 screens, my proper graphics card, just everything that I have here, proper mic, etc. Right? So it's been a bit tough, but now let's go through Tesla. So we had a Tesla buy opportunity when Tesla was at 140. I mentioned to the group at 160 as well that this is a great opportunity to put shares into Tesla, because when there's fear, then that's when you really want to jump in. Now, Tesla proceeded to consolidate for multiple weeks and then massively break out on positive delivery numbers just last 1 week or so. And the case with this obviously has been really, really interesting, because I think that, once it got up to this breakout level here, it's just been completely melting up. And you guys know my stance on this. When Tesla goes, it goes. You really can't bet against this right now, because there is so much of interest to bid up these prices. I would wait for a clear rejection either at 262, which is up here, or around 270, which is a little further higher, and see if this area becomes a supply area. But as of right now, playing this to the upside doesn't make any sense. Playing this to the downside doesn't make any sense. So this is one of the trades where I would just sit and watch patiently, because there's not much to do here. If you take upside positioning, you might get slapped into the downside. If you take downside positioning, Tesla might keep moving up all into 260s and 270s. So I don't like the risk to reward ratio opportunity here. It doesn't benefit me. And so I would stay away right now in the short term. Okay. And that's just my 2 cents on this one. Okay, now, CrowdStrike. So this one's trading close to all-time highs, right? It's trading at all-time highs. Of course, if it breaks out, it's going to get into price discovery. But the question is exactly where is price going to discover? So we need to have some upside targets. And one of the nifty ways to do that would be to draw this extension here from the previous huge wave that we see. 500 would become the 61.8 extension based on this huge extension here. This would be the bottom. This would be the most local high top. That would give you the 23.6 at 430. 469 would become 38.2, and then 534 would become 61.8. Now, this is very possible because cybersecurity has been on the run lately, right? If you look at just this, Zscaler and DDoG, right? They've all been moving higher, okay? And so I do like DDoG as a potential setup as well. I was going to mention it earlier. But Richard, I agree with you that if it does break up above this, then it would potentially reach up to the 400s. And that's very possible because 430 would be the first target for me personally. So I do agree with you. Just watch for the breakout first before you do anything, because you don't want to be rejected and then keep moving sideways here. So if you're playing options, obviously, if you have equity in shares like I know you usually do, then just hold it, right? Okay, so IWM done, Tesla done, CrowdStrike done. Let's see, PFE, long downtrend and starting to see consolidation. Would love to buy some swings on the break of consolidation. Okay, let's have a look. Second. Okay. So yeah, Jonathan, I would definitely wait on this one, right? I would for sure wait on this. I don't want to touch this anytime soon because, even just looking at this, very simply, you're gonna be in range until this thing breaks either way. And playing this here, you have very slim upside and downside. The risk to reward ratio is all out of whack. You need this to move either down here for you to take some risk, or you need it to move here to take some risk. Because then only is your risk to reward ratio warranted. Okay, so you would have either a risk off, risk on scenario here or here. So I would ignore this until it gets to either point, set an alert, and that's the easiest way. I would just do this, set an alert here, do that, and then do this, set an alert here, and do that. And there you have your alert set up for both of these situations. Could you look at DUK? Appears to have a falling wedge in the hourly, daily, and weekly. What's your thoughts on potential swing play? Let's have a look. What is DUK? UK. Okay. Let's just have a look. Okay, I see the falling wedge that you're talking about, but let's see if it actually is one. Yeah, it is a falling wedge. Okay, so I do like the setup. Not bad. Not bad. I like it. Is it really going to play out though? That's the question. Okay, so first things first, where are your pivots? This is your pivot. You have a actually bigger pivot here, but this is the real strong pivot. Run slightly further down, like there, and then your downside pivot is pretty much here. So, okay, so for a swing trade, let's have a look here. Yeah, I mean, there is potential here. I like it. I do like this as a potential idea, actually. Your upside is going to be all the way up at 106.28. For a swing play, this actually does make a lot of sense. Yes, I do like this. So your risk off would be essentially if it breaks this level here, 101, right? It breaks out, it comes back down, it retests. You want to enter somewhere here, okay? Somewhere here for the upside breakout. So you want to kind of time this so that when it does break out, it's going to come back and validate a higher level of demand here. Once you get the higher level of demand, then you can look for the extension, okay? Until that happens, I would say stay away because it can still consolidate or it can break further down. And so I would set an alert right here, okay, at 101 roughly. And then I want to set another alert on the downside here at 99.52. So I would follow through with this at a separate time. But you have your pivot, 101.70 and 99.30. That's your pivot for this specific setup. And then for the swing trade, you want to get as close as possible to down here, somewhere here. You want to enter somewhere in this region, so that all of this is your risk, right? Somewhere here is your risk. This is all your risk. And then your reward is all of that. You see? That becomes attractive. So this is like a 1:3 risk reward ratio, which is nice. For a swing trade, that's nice, right? So this is how I would plan it. Breakout, retest, test, and then confirmation, and then you can jump on. That's what I would do. Okay. PLTR looks good. Yep. So PLTR has been coming into the flow massively the past couple of weeks. We've been talking about it quite a lot. I highlighted it quite a few times on our flow, and that's just something that has moved. Now, just to express a bit of caution here, okay. Let me express some caution on PLTR because it's just broken up in a breakaway gap, and it's at the end of a very big wave here. So moving up to $29 is very possible. Now, if it does move up to $29, should you chase this to the upside, even for a day trade? The answer is no. Okay, the risk to reward ratio is too slim, and the IVs are going to be way too high. If you take this trade to the upside now, you're going to lose money. Okay, so don't do that. Please be patient. Let this thing come down. It will correct back down. Okay, give it time. It corrects a lot. You can see every single up wave is met with a corrective wave. Now, obviously, if it goes like straight up, then just ignore it and move on to the next pick, right? But the point is, if you don't get the price that you want, then stay away till you get the price you want. Okay, don't let the market push you into a direction where you're being forced into the action, because then you're overpaying for contracts, doing stupid shit, and the risk to reward ratio is not in your favor. Okay, so just exercise caution here with this trade, because I know a lot of you are looking at it, and let me tell you that right now it's not going to be the best opportunity. All right. Okay, now Baba made 2 consecutive higher lows. We're hoping that this continues to bounce to the upside. I have a long dated call option on this one. Very simple, straightforward swing trade. Risk off right below here. So I'm taking on very little risk. I entered somewhere here. This is where my risk off would be, a little below that, like around $70. And I'm happy to take a $3 stop loss if the reward is going to be that. Okay. So as a swing trade, long-term positioning, I like this trade. Okay. AMD, we played this last week. Beautiful play. We caught the break, part of the breakout, and the acceleration up. Now that it is breaking out with another breakaway gap, wait for this thing to come back down. Okay. If you enter trades here where it's breaking out and it's at the end of such a massive wave, remember that you are likely to become what? You are likely to become a liquidity exit. Okay, so don't be a liquidity exit. Don't be an idiot sandwich. Don't be a Dumbo. Wait for the right time. Okay, wait for pullbacks to happen. You have no rush to jump into this right now. AMD was sitting here consolidating for months, right? None of y'all had the urgency, and now all of a sudden when it's running up, everybody wants to rush to buy it. So don't do stupid things like that. Okay. J&J, I like this opportunity for a potential bearish play or a bounce play. This is a very key dual zone that it's sitting at, and it's consolidating at. This is also a falling wedge pattern. Okay, I do like the upside positioning more than the downside. I will say that's my bias. D-Dog, this one broke out of a downtrend, did an under the ball sack move where it squeezed, and now it's coming back down to collect some liquidity. Let's wait for this to see how it actually plays out. But I like this potential setup here. Looks like a nice mover. Needs some pullback, and then we'll see where it goes. Moderna, long-term trendline bounce potential. Look at the 4-hour. This thing could bounce here and move further higher to the 130s. So I do like this as a potential healthcare pivot. Healthcare has been doing quite poorly as a sector, you can see. It has been kind of moving upwards, but just sideways, right? So I do like a potential Moderna bounce here. Next one, Penn, National Gaming. This small mid-cap underbelly name has been seeing some increased appetite and has recently just broken out of a key level here. If it can break out further from $20 and stay above $20 and have momentum behind it, I'm happy to take a potential play up into the 22, 23 range. I want to also, of course, see if there's some unusual flow behind it. That's what I'm going to talk about it. XOM, I'll post this on the Discord. Coinbase, the same thing. I'll post it on Discord. Hood, McDonald's, Intel. This was another one I was watching for a long time, but it ran without me. Snow, and I'll post the other opportunities to the team on Discord, just to be fair. There are some of them that I will post exclusively for them. So, PLK looks good. It was in reference to crowd. Okay, got it. T, if you have time, NGG. Sure. What is NGG? National Grid Transco PLC. What's the market cap of this thing? 57 billion. Okay, that's not bad. I have no idea what this is. Looks very volatile though. Damn. Young blood. I personally would stay away from trading this. Just look at the volatility. Like, yeah, it's great, but like, it's too much. It's too many inside ranges. Too much of like non-constant, predictable pattern. It's like a lot of inside ranges and outside ranges. Inside ranges and outside ranges. Like it's almost non-predictable. Like you see, it scoops liquidity here and then flushes back up. Like this price action is wild, right? Even in the recent, like what, the recent 2022 all the way to now, right? Crazy. It's like it sells off like hotcakes and then gets bought up, and then sells off and then gets bought up. I mean, but if you want me to do TA on this, I mean, I wouldn't really know where to start here, but essentially, it looks like it's come down here to create some liquidity engineering. A bunch of volume came in here. Below this previous level of support, it's created liquidity here. Some market makers have stepped in this range here, and it's likely trying to get back up into a higher range. Now, where that would be, this would probably be your first target, your second target, and then your third target up here. That's what I would look at this at. If it moves back up here, likely to take your first profit here because there's a potential rejection range here, and then the rest is history. So that's all I have for you guys today. I hope that you have a good trading session. I'm going to jump on the live now. And yeah, let's get this bread. So I'll probably see you guys back on Wednesday. However, I will tell you guys that the last 2 weeks of this month, I will not be active. I will not be active at all because it will be the wedding time. And I will be spending a lot of time with friends and family who are traveling across the world to come and see me for my wedding. So I will be taking 2 weeks off from work this year, sometime in the end of July to the first week of August, maybe 3 weeks. Let's see how it goes. But I will be active on Discord still every single day. And the team, the mods who are in the team will be also active on Discord. So I hope that you guys, if you haven't joined yet, click on the link in the description below. It'll bring you straight to the Discord, and you can be a part of a community for 14 days for free. But we also have a free access, which gives you basic stuff. Okay, so I highly recommend you join the premium subscription. And yeah, we'll see you on Wednesday for the next update. Peace out. Take care.